ensuring enough so we deliver our commitment to get debt falling as a share of the economy?
I think just markets are just glad to see the calm echoed in the statement. I think with the previous Chancellor and the budget outlook there, it was a bit too dramatic for their liking. And we are in a very interesting world where borrowing costs and interest rates continue to go up. There's a lot of uncertainty about how deep the recession will be and how governments can help. I think they don't want to see the government spending or making too many big claims on spending at the moment when there's still perhaps a lot more to come in terms of economic pain. They're sort of just moving around, don't they, really? I don't know when I'm sort of talking. I'm trying to explain the point. I think what we've seen is a very different approach from the last Chancellor, essentially saying, well, the government doesn't want to make unfunded commitments, it recognises it's a very difficult time and that borrowing costs and interest rates probably will continue to rise, both for governments and for consumers. So it is hard to balance the needs of taxation and spending, really. And I think the message you're getting from the Chancellor is we are very much in control of the situation, we are aware of the trickiness, if you like, the balancing act that's needed, and that we won't do anything too dramatic. No, the surprise is the fact that we're going to do it today, but in it was, you kind of knew what he was going to say. You had, this morning when UK bond trading started, you had an easing of gilt yields. So the market's sort of saying, okay, we'll wait and see, but we're more relaxed now than we were at the end of trading on Friday when you'd seen them rise sharply. They're still obviously much higher than they were a month ago, but the rise, if you like, has stopped. And the pound rallied against the dollar in the overnight trading in Asia. So again, perhaps the market's saying, we think things are in a better place than they were a few days ago and prepared to give the new Chancellor the benefit of the doubt. Uncertainty about the new Prime Minister. I think there's also more uncertainty about if they try to replace it, because what would that involve? Would it be a short, sharp change with a sort of rapid coronation? Would we have to go through the whole leadership contest again, which brings in a lot more uncertainty? So I think markets in some ways would rather things just stayed as they are for a while. Okay, the PM has found her authority quite truncated, but at least you've got the Chancellor in place, almost running the country in place of the PM for the time being, at least on the fiscal side of things. And I think they're quite content with that slightly odd state of affairs for the moment.
The car reg is 070, and the move on the energy guarantee, that's the biggest measure